This is the S1S podcast, episode 14, part 2.
The Stage 1 Startup Podcast is launching in T-minus 5 seconds. 3, 2, 1, 0. Prepare for liftoff.
Welcome to the Stage 1 Startup Podcast for startups and aspiring entrepreneurs to find out what it takes to launch any business idea from stage 1 to success. Now, for your hosts, live from the UK, Nichols and Morley.
Hello and welcome to the Stage 1 Startup Podcast. This is part 2 of episode 14 and you are tuned in with your hosts, Greg Nichols
and Brad Morley.
Now, if you're listening to this and you haven't listened to part 1, what you're about to listen to for the next 40 to 45 minutes probably won't make any sense whatsoever. So we would 100% recommend that you go back an episode and tune into part 1, where we interview Dinesh Kandanchatha for the first time, where he talks about the first part of his journey as an entrepreneur.
And he shares some great wisdom about how he has had such success in the investor side of things. He's built, exited, led, and grown some really successful businesses. So he knows his stuff.
So that first part was pretty cool, wasn't it, Brad?
Yeah, it was. It was a great episode, and that's why we decided to do a round 2, because there was just so much value to get into one show. We just couldn't fit it all in, so we just said, let's just do 2 parts.
Yeah, we decided it like halfway through that episode as well. And we was like, we cannot cut this, we can't cut this short whatsoever. So we're back again with part 2. So keep your ears open and make sure you're paying attention. Make sure you're writing down loads of notes, because Dinesh is about to drop some huge value bombs.
Drop bombs.
He's dropped the bombs on everybody that is listening right now. He's a key guest. And I think, to be fair, everybody is going to learn some huge stuff from Dinesh. Brad, are you ready for part 2?
I'm so ready, man. Let's do this.
Let's do it. Let's go. So then, everybody, please welcome back Dinesh. Thank you for coming on the show for the second time to continue with part 2.
It's my pleasure. Thanks for inviting me back. That's always a good sign.
As we were saying, I mean, Dinesh, in the last episode, there was just so much that we got through, but so much left that we wanted to touch on, and we just thought, you were just on a roll, and we just thought we've got to get this we've got to get Dinesh back for a second time. So thanks again for agreeing to do that.
My pleasure. I had a great time as well. So it's phenomenal to be able to speak with you again and to have another conversation that might, we all might learn some more.
Definitely.
Through.
And what's good as well is that where we've kind of built up a little bit of momentum within our Facebook group, we've managed to kind of get some questions from our community as well. So we're involving everybody in this one.
That's awesome.
Cool. Right. What we're going to do now then, everybody, we're going to jump straight into part 2 of the questions. Now, these types of questions are about the tools, techniques, and tips that our guests are able to share with us so that you guys can gain momentum with your startup business. What I'm going to do is I'm going to pass you over to Brad, who's going to hit you up with the first question.
Cool. So, Dinesh, as a way to start this, as an investor this day and age, what would you say is the best way of connecting with potential clients and startups? Would you say, sort of, if we can focus on the online/offline, share some examples of what worked for you?
Sure. So just so I can clarify to make sure I, answer properly, as a business trying to connect with investors, or as an investor trying to connect with startups?
Investor with startups.
The biggest challenge with connecting with startups is there's a lot of people chasing a small group of, there's a lot of startups and a small group of investors. And so the challenge really from an investor's perspective is to identify those startups, those organizations that are aligned with their investing philosophy and, meet the requirements, because every investor is a little bit different. There's ones that are early stage seed investors, so really what I call back of the napkin investors, so people who invest when really all you have is an idea. There's other guys who invest, once your idea is validated and you have your first customer. There's guys that only invest after you've really gotten to the stage where you have cash flow coming in. And each one of those investors, they all kind of have their own haunts. They're all in different places. So myself, I'm looking for folks that businesses and startups and teams that have reached what I call product market fit. They've created an idea, built the initial generation of the product, and have secured their first 10 customers. They don't have to be profitable, but they've identified their market niche. They've got some of that hard, heavy lifting done. And, for the most part, I'm looking for folks that are what I would say are non-sexy businesses. So businesses that are infrastructure based, businesses that can scale to 20, 30, $40 million a year in sales. But, it would be incredibly lucky, but most of the time are not going to turn into billion-dollar businesses. So I have a very specific investing philosophy. When I look for those businesses, what I try to do is I try to go to places where those where people who are experts in those domains live and breathe. And those could be meetups. So startup meetups are a great place to go find folks like that. Forums like this, where that's one of the reasons why I'm very interested in speaking with you guys, is you guys are connected to a whole bunch of a community of entrepreneurs that are at different stages of their life cycle. Some people might today only be at the idea stage, but now they know about me. And when it comes time to look for capital, when they check the box and say, yeah, I got 10 customers. Yep, I found a business that'll that's kind of a lot of people can use, and is got predictable revenue associated with it. You know what? I think now's the time for me to reach out to Dinesh, and that's the way I, as an investor, try to find people great businesses is to key into ecosystems where I know those investors exist, where those businesses exist, with the idea that if I share my vision, my values, my methodology, the right people will raise their hand and go, you know what? I think I need to talk to you.
Yeah, no, that's brilliant. So, I mean, now I want to try and actually put this on the flip side, because now that we can see that side of it, could you perhaps walk us through maybe what the other side of things, what startups could be doing to, do the opposite, when they're looking for investors? I know we've got the likes of, crowdfunding sites and things like that. But I mean, for more of a personal touch, sometimes, I'm not sure. I don't even know what the whole process is of it. So,
yeah. So there's lots of different ways. Yeah. There's lots of ways to raise money. They're all difficult. So just setting everybody's expectation from the beginning, irrespective of which way you pick, whether it's crowdfunding, whether it's friends and family, whether it's a strategic investment from a potential customer, they all bring with them their own challenges. As a business owner, as an entrepreneur trying to advance this idea, and build a business, what you really want to do is you want to figure out where the ecosystems where people who understand your business live. So my very first business, what we did was we were creating, without getting into too much technical jargon, a operating system that allowed products like digital cameras and other consumer type devices to work and do new things that they couldn't do before. So we spent a lot of time working and identifying partners and customers and investors who were already in that business. So people who had already made money in a semiconductor, selling computer chips, for example. We went out to them, tried to get some money. People who were selling to the military different computer boards. So folks like that, high net worth individuals and institutions, whether they be angels or venture capitalists, who have an existing portfolio of businesses that are in your space, is the first place to start. And that takes a little bit of time, but that research is really, really valuable. Trying to get an investor educated on your business will take an incredible amount of time, and it will also, has a very, very low success rate. So you really want to pick people who understand your business, understand the problems and the opportunities, and really their efforts are focused on assessing you and your team, and the execution of the idea, which means thinking smart about where those people live, and then getting out in front of them either through thought leadership, either through just straight networking, going to the conference, sending out, 50 emails saying, I'm going to be at the conference. Do you have time for a coffee? And getting them to know you, because investors invest in, as I said last time, in teams, and then the teams execute on the business idea. So, you don't get to know somebody in one meeting. It takes months.
That's great. I mean, one question that I've been kind of thinking about over the past few days, and I would really love to hear your thoughts on it. What are your thoughts on the likes of crowdfunding? Because obviously you're a professional investor, and would you recommend going down this route, or are there alternative routes?
Crowdfunding makes a lot of sense if you have a product that has mass market appeal, typically B2C products, so business to consumer products. Bicycles, like there's this great crowdfunding thing around electric bicycle, things that people will, any person would understand and could say, I could use that.
Yeah.
Those are great sources for crowdfunding because, you're now spending your time, you're getting a customer and an investor. That's a 2-for-1 deal, right? And frankly, that's, as an early stage company, that's a great way to get kind of your idea off the ground. The reality is that kind of funding can only go so far. And there are a few great examples of people raising, $500,000 to $1 million. But most of these crowdfunding things are in the 10,000, 20,000, high end 50,000. Like they're smaller dollar values. So the amount of effort you're going to spend to try to get that. The other piece of reality that I think the crowdfunders don't tell you, but the reality of it is that almost all of those the successful ones were successful before they entered the platform.
Yeah.
So they seeded the crowdfunding project with investors. So, is the crowdfunding raising the money, or is it the fact that they've got, a team of folks, of ringers and behind the scenes that have already signed up, right? It's an interesting question. If you're doing B2B, if you're doing something that's kind of not a broad consumer product, it's going to be hard to use crowdfunding. I would start with friends and family. Almost all the entrepreneurs I've worked with over the years have had to, if your family won't believe in you or your friends won't believe in you, you have to look for either new friends, because frankly,
Gotta let them go.
that's one of the other lessons, is you want to associate yourself with people who are going to be, it's hard to change your family, but your friends you can change. And then, see if you can get, $10,000 from your friends, right? And, that to me is a great practice for the effort you're going to have to do with an investor, because if you can't sell people who are closest, and people who are closest to you are often the ones that are most brutal, and the result of that is that you're going to be able to hear all the objections, and some of them you'll feel like they're completely off the wall and are irrelevant. But that's the hardest thing about being an entrepreneur, is developing that thick skin and to be able to smile even though you want to choke them. Because you spend a lot of time with investors who are going to ask you questions and they just seem so disrespectful, and customers too, for that matter, where you just got to keep that smile plastered on your face, even though inside you're thinking, I could probably get across that table in 2 seconds.
As Greg was saying earlier, we've got quite a few questions here from people, our follower base, but also people within our communities, because I think that someone like you're going to know the ins and outs of it, but I think investment's one of those topics where a lot of people try and work around it because they don't really understand it.
Yeah, it's a touchy subject sometimes.
Yeah. And there's a few things. I'm going to start with this one in particular. So this is a member of our Facebook community. I'm just going to read her question out straight out. So she's put here, getting millions of dollars to create a SaaS product, for example. I've been bootstrapping my own, and while I wish I had more funds, I can't get my head around how these startups are spending so much money. Can someone please break it down for me? What's your is there any way you could try and analyze that for us?
So SaaS is very unique as a business model, and the way that SaaS businesses grow, it's more analogous to the way the old hardware businesses were started and ran than traditional software, which we've been, we were used to for the previous 20 years, like from the late 90s to kind of mid 2000s. Well, even 2010, SaaS really started taking off. And the point there is that SaaS is capital intensive because you don't have licensing rights. So, let's say, for example, you were buying Salesforce, which is a very famous SaaS application. That's $250 a month. Well, in the old days, before Salesforce, if you were buying Siebel or Sales Logics or any of the large CRM systems, customer relationship management systems, you would be spending $500,000 to $1 million. And so those companies were able to get all that cash upfront. And so the result was they could fund operations from sales, from cash flow from sales. A SaaS business, a good SaaS business, will not have cash flow from sales because they're going to be selling $250 seats or $100 seats or whatever at a time. And you might be growing on a monthly basis, a monthly recurring revenue basis, $1,000, then $5,000, then $10,000, but it's a steam engine. So we have this, this idea of the valley where, there's a period where you're burning cash, a lot of cash, but you're acquiring customers. And when you come out the other side, you have a break-even point where your because it's a residual, $250, they pile up on top of each other. And you get to the other side, and all of a sudden your costs are fairly flat, and your revenue is growing at an exponential rate. So you get this ability to earn back all of the cash that you've invested in a very short period because of the slope of the revenue curve, because your costs are staying flat and your revenue is growing exponentially. So that's why SaaS businesses burn so much cash up front, because they're grabbing land. They're trying to get as many users as they can on the platform as fast as they can, and whether they're doing it with a freemium model where they're giving it for free and then they're expecting a conversion rate on their users, 5%, 10%, 2%, whatever it is. Their goal is to grab as many users as possible, and that costs money because they have this faith, they and their investors have this faith when they get to the other side, they're going to have a residual that is going to be millions of dollars a year. My second business was a SaaS business, and we were losing money for a long time. But then we came out the other side, and we were generating $5-6 million a month in recurring revenue on a cost base that looked pretty much the same as it did, at $6 million a month that it did at $2 million a month. So you start driving an incredible amount of profit to the bottom line.
Perfect.
That's great. So let's talk about the startups that are listening right now who are looking to become an investor. So, for them wanting to become an investor, what's the first thing that you would recommend they walk away and start doing this second?
Yeah, great question. It's very, very hard to be a successful investor. I often joke that I'm a far better business person than I am an investor. And the reason for that is if you want to be a successful institutional investor, there's two models. One is a portfolio model, which is you invest in a lot of things and you play the averages. And you see this with large funds, but you even see it with smaller funds like 500 Startups and Y Combinator and some of these other accelerators. These guys have $20, $30 million funds, but they're writing $100,000, $150,000 checks, and they're dividing it up amongst a large group of companies, and they're the ones that succeed they'll double down on, and they're expecting a small percentage to succeed. So you have to decide what model as an investor are you going to go for. Are you going to go for the kind of the portfolio management model, or are you going to go for the model which I kind of follow, which is lean in and be very involved in two or three? And then get them running and, seek to get fired. So go in, work very closely with the CEO, build out the systems, leverage for me, because I built businesses, that's my expertise, help bring those skills, those expertise to bear, and then aim to be fired in 6 months because you've done your job well, and you can bring in your replacement and move on to the next. The reality, depending on how much time and how much your family will put up with you being in the office, is you can You can do that for 1 to 2 businesses a year, but over and most investors have a 5 to 7 year horizon. So you can imagine that's 14 companies. If you're good, if you're really good, you might get, of those 14, 2 or 3 exits out of those. And each one of those, if you get in early enough, can be millions of dollars. The key thing is you have to be in for the long. It's a marathon, not a sprint, and you have to be willing to really put as much of yourself as your money into the investment.
Do you have to be an experienced business owner first before becoming a kind of investor, or can you literally just go in off the cuff as an investor as a startup as well?
Uh, I don't know the answer to that. There are every investor I've ever met has made their money in business somehow, whether it's real estate, restaurants, transportation. They've all been in business, right? They've all come from business families, and the reason for that is there's a set of kind of experiences and lingo and skills that you need to kind of get to properly assess an investment, whether it's worth investing in, and also more importantly, once you are in, solve all the problems that are going to happen, right?
Mm.
So I don't know anybody who I'm not personally aware. Well, maybe one or two folks who've been university professors and then became investors,
Mm.
well. That's not true, because there's a lot of celebrities who become investors. But one could, make a statement that celebrities are in fact in business. Their business is their personal brand. So I don't know. I think it's
Oh.
tough if you've never run a business or never had to deal with the challenges of
Mm.
employees and branding and marketing and sales and operations and
Yeah.
whatever it is, ever to then invest and be able to protect your capital and not get taken for a ride. I think would be very challenging.
Great bit of advice. Thank
Yeah.
you.
And I think as well, this just sort of goes for everyone, that if you've been through the trenches like yourself, then as you say, you get a better understanding, but you're probably going to be more confident as to what you can bring to the table.
Yeah, I agree. Experience is frankly the best teacher in these things, right? Yeah, how do you know if you've never how do you value a business? That's really the
Yeah.
fundamental question an investor is asking, because the founder values the business based on its future potential, right? The investor has to balance that future potential against both the founder and his or her ability to execute, but also against other comparable investments. And so it's very difficult to make those estimations unless you've got some experience about what the opportunity cost would be of that $100,000 if you put it into the stock market, if you bought a real estate, an apartment, if you invested in a taxi cab, or you bought shares in a software company.
Mhm.
All of those are equally good uses of that $100,000, which is going to generate the best return for you as an investor.
Mm.
That's a tough question.
And also, I mean, one big thing for me, I'm looking now on the inside scope of things. So if it was my company I was bringing to an investor, in my head, I find it difficult when I watch the likes. I've not watched Shark Tank myself, but we've got Dragon's Den over here,
Yep.
and I think these people are coming through with these amazing businesses. Some of them are, say, it's like a food business. They're already in these supermarkets. They're looking for that one door to get into the next that will really expose them. But they're willing to give away like 30% of their business. I mean, this is the bit I don't understand, because I think, what's the sort of process with this insofar as you give away that 30%. I mean, firstly, sort of how do you estimate up, what you're willing to give away? But secondly, where does it end? I mean, do you just do it until, you've got where you want to be and then try and buy the investor out? Or
Well, listen, if you're really successful and I get 30% of your company, I'm unlikely to sell it back to you for anything other than a lot of money that you
Yeah.
probably can't afford. So there's a couple of things in the agreement. First off, that's a really, really good question. And it's a question every business owner should ask themselves is, are they trying to create a job for themselves, or are they trying to build wealth for themselves through a business? And I think what ends up happening is a lot of folks just get really, really tired, and they get tired of having everything on their shoulders and having to not know if they're going to make payroll, or if they're going to have to dip into the line of credit this month so that they can pay the rent, or often the line of credit's done and now I have to go to uncles and mothers and Brothers,
Bank of
everybody
Dad.
knows Bank of Dad. Frankly, I mean, I've been there too, right?
Yeah.
And so, the idea that you could bring somebody in who has deep pockets, and then, even if you had to give up the famous saying is, 100% of zero is still zero, right? And, you give up 30% of the business, and now all of a sudden you've got that safety net. I just don't think it's true. I think the investor is not a safety net. The investor's there to make money, not to help you feel safe. And if I'm investing and the business isn't going well, I'm going to do everything I possibly can to protect my capital, and sadly that includes screwing you. Because that's the quid pro quo of investment. If it was charity, then it's a different story. An investment means I have to get my capital and a return on that capital. That's the nature of investment. And that means, if I have to replace you as the CEO to get my money back, I'll do so. If I have to sell your business out from under you to somebody to get my money back, I'll do so, because that's what my job is as an investor.
Yeah.
Now, so that brings with it a lot of challenges for you as the business owner, because the business owner who walks in thinking, oh, this person's, a full partner and they care about everything I care about, they don't. There's, of course, our interests are aligned while the business is growing because we're both making money. But as the business goes the other way, the interests get very, very divergent very, very quickly. So if you give up 30%, what you end up doing is, limiting or eliminating options for you on the other side. And every business has an up and down. It's just the way it is. And you want to try to maximize your options on both sides. And most business owners don't think about, well, what if things don't go right? How do I protect the business that I've spent 5, 7, 8, 10 years building? And that's why you need a good lawyer, and you need a good shareholders agreement, and recognizing that you don't want to you don't want to give up a lot of your company early. You want to give up as little as you possibly can, and build value and give up more, and then build value and give up more. Which is, somebody said to me the other day, I'm going to go out for $10 million in my first round, and I said, that doesn't make any sense. If you let's even say your business is worth $10 million, you're going to be giving up 80-90% of your business before you even walk out before you've built a product. So try to hit milestones, grow the value of the business, and give up little bits, because every bit that you give up down the road, you give up less of your business for more value. And it's hard to raise money, but it's really important that you recognize that you're not trying to get into a position where you create yourself a job. Because if you do that, you have 2% of the company and 98% is in your investor's hands. You can call yourself an entrepreneur, but really you just created yourself one of the worst jobs in the world, because you have all the responsibility of being a business owner, but you don't have any of the upside.
Yeah, and I've actually saying that I've actually seen it happen where somebody's done extremely well to create a business and give too much away to somebody that was very sort of intelligent he knew what he was doing. He'd invested in loads of other startups, managed to switch the ball around. They'd done it all to get more clients, got a lot more clients, got some great work. But it got to a point where it completely switched around. The company ended up his, and they ended up the ones having to hit, milestones to bring in certain amounts of money. And I just sort of seeing that from an outsider view is, it's quite scary.
It happens more often than you think. 50, 60, I don't want to put numbers to it, but just in my own personal experience, I can think of 12, 15 entrepreneurs that went for investment, and 3 years later they were out of their own companies.
It's crazy.
Well, the thing is, I've always kind of wondered, first off, I just want to say thanks for explaining that whole process, because I've always wondered how a CEO can be kind of pushed out of their own business when they created it. Yeah, we created it. We was talking about it the other day, how Steve Jobs got booted out of Apple. You only think that's his business. How does that process work? And you've just explained that perfect.
Yeah, and it happens very frequently because, the entrepreneur is building a vision. The investor is getting returns.
Yeah.
Yeah.
Right. And so if, the investor is happy with the vision, as long as it's returning those returns, the second that stops happening, the investor will attempt to guarantee their returns. And if they can't guarantee their returns, guarantee their principal, which means that, they will sacrifice the entrepreneur's vision first. And if the entrepreneur's vision isn't malleable, which is the case of Steve Jobs, and a lot of entrepreneurs, they have their vision, they're not going to adjust it. Then the entrepreneur gets on the block and they find somebody who will adjust the vision so that they can get their returns.
And all I would just like to say is that is the reason as to why we've invited you back again for another round within the podcast.
It's one of those topics, isn't it, that a lot of people, as I said earlier, a lot of people don't know about it, but are intrigued to know about it. And I think a lot of people need to know, like, if you're going into the investing route, or whether you're being, you're creating your business and thinking about investment, these are things that you need to take into consideration.
Right, and when times are good, guys, like it's we're never in conflict. It's when times get rough and the waters get rough. There's only so much, there's only so much any investor can support. Right, at some point, they're going to have to change something, and that's why you need you as the business owner. I've sat on both sides of the table, and as the CEO and founder in the business, I built in mechanisms like friendly board members, guaranteeing board seats, so that when even when I didn't have enough voting shares to be able to control the board, I controlled the board members. So as long as we could vote together, I would be able to vote if I had to against my investors. Now, the fact is if you've got to that stage, things are really, really bad, right? Just to make it really clear, in 90% of situations, you don't want to get there. You want to work with your investors and your management team to make the best possible scenario for the business, because we win when we all work together. What happens in a small percentage, and sadly often in my experience, a growing percentage of companies, is that the board stops functioning, and when that happens, that's when these kind of battles appear. They happen behind closed doors, and then you see these Company X has gone into bankruptcy or sold to private equity, or they all agree they can't get the business to work and they sell off the business. That's one outcome. Or you see, the so-and-so CEO has decided to move on to other prospects. And there's an interim, the chair of the board typically will step in as CEO while a new leadership search goes. And those are the signals that there was a big fight behind the scene and one party won and the other party lost.
It's crazy, isn't it?
It is, yeah. It's good because I think you've cleared up so much kind of mist between on like what investing actually is and the process of it, and there's so much that you've really tried to help our listeners out on. And there's as again, all I can repeat is that you've given so much value. But I also have one more question.
Sure.
So if a business is the business is doing really well, they haven't seeked out investment, let's just say it's starting to creep up upon the millions. Do you always think it's essential to look for an investor? Is it always essential for a business to have an investor, or would you recommend not going for one?
Never go for an investor unless you absolutely have to. There's lots of ways to make money that doesn't require external investment. If you have a business that's growing anything over 10% a year and has positive cash flows and little overhead and good accounts receivable, in the sense that you don't have long strung out, in 60, 90-day collections, every country in the world has entrepreneurship programs to support those companies. Whether it's in the U.S., there's banks like Silicon Valley Bank and others that can give you debt-based instruments that, of course, do not create any dilution, and frankly, it doesn't cost you anything other than the interest. And in Canada, and I think in the UK and other folks, there's government programs. There's actually government agencies responsible for entrepreneurship that have specific loan programs for companies that are in the area. So what I always recommend folks do is, before you go out and look for private money, make sure you have exhausted every source of public money available to you, whether it's R&D credits, whether it's business coaching or consulting, whether it's grants. Regional development grants are a big place to look. In Canada, there's things like federal development grants, where the government will match funding and terms with private investors if you're doing a round. There's all sorts of tools. Every jurisdiction has its own set. The smart business person, entrepreneur, exhausts every public option and every debt option before they go for private money.
There we go. Perfect. Now, Dinesh, since we're on a kind of mentoring session here, that's what I feel like. We understand you yourself are a mentor, and you do mentoring. So we want to talk about those sort of opportunities these opportunities that have arose for you.
Sure.
Because obviously, you know, you've been speaking on stage. You've got mentoring that you also mentor on the likes of Clarity. What sort of techniques have you used to get these opportunities, or have you always been sort of approached for them?
Well, so the world is changing, and the most interesting thing is, I don't know if we touched on this last time, is the personal brand is really becoming front and center.
Yeah.
So what I've worked really, really hard at doing is really focusing on getting my message clear, both for myself and for the people that could be potential clients or investments, and then putting myself into the places, like I said, where those people are. And the way my programs work is, my reason for doing mentorship or consulting or coaching is really to share. I'm lucky I don't have to do it for the money anymore, which I think helps from the perspective of how I view it, and frankly how I think my clients view it, because I'm, pardon my French, I'm not going to put up with any bullshit, right? So if you come to me and you ask for me to help you, and you can disagree with me, I'm totally cool with disagreeing with me. I'm totally cool with having a massive kind of back and forth based on fact and based on data, but doing nothing or just ignoring and not contending with me around the idea, that won't work. And I'll call you on it, and I'll very quickly stop wasting my time. So really the thing for me about mentorship is about meeting really smart people, which I've been blessed with, and learning from them as much as I hope they learn from me, learning about their businesses, learning about market conditions, learning about experiences, because every entrepreneur has this totally unique set of experiences. And frankly, those experiences I might be able to apply to an investment or apply to another conversation. And that's been incredibly rewarding for me. And I hope the reverse happens to them. But almost always it's tied to personal branding. So I focus on my brand, focus on my message, focus on trying to speak and offer my insight and in a way that is accessible to as many people as possible. And then hopefully a percentage of those people go, look, that little nibble was enough that I want to I want to see what the whole meal looks like. And sometimes the whole meal is a consulting engagement. Sometimes it's working with them on their board. Sometimes it's, what, I really believe in your business, I'm going to put some of my money in.
And that leads really perfectly onto our next topic of question. So obviously you spoke about personal brand and how important it is and how kind of upcoming it's going to be within, in the next few years. How are you doing that? Like, how are you putting yourself out there? Are you using social media? Are you marketing? Are you advertising? What types of strategies are you using?
So it starts out by getting a good brand consultant. And so I have a phenomenal brand consultant, and I'll plug him here. His name is Phil Palin. He's also on Clarity. He's the guy that has done a bunch of work with the Shark Tank and Dragon's Den guys. So whenever my rule is, if you want to do something, go for the best. Because that investment, it'll be always more expensive, guaranteed, but you'll get the value. If you get the guy that's working with the top footballer or the top basketball guy or the top golf guy, I don't care that guy will make you better, irrespective of, you may never turn into Beckham, but the fact is that you'll definitely get it. You'll get a few more goals, right? And so that's the same thing with me. So I went to Phil. Phil and I put together a program which was to really completely redo my brand, and so that it was authentic to the person I was, which is one of the things that Phil is phenomenal at, is helping kind of expose the person you are. And then we put together a small team. So I have 3 folks on my team who seek out the audience, kind of the ecosystems where my potential clients could be. And then we write articles and we do podcasts like this. And I dedicate a percentage of my time to my brand and marketing my brand every week. And I do 2 to 3 networking calls every week. And the idea being that I meet with CEOs. I do try to speak to three new CEOs every week, and that's my 2 metrics. One is blog posts and speaking engagements. So public speaking in the form of written or verbal, and network building, which is new CEOs. I know that when I connect with CEOs, that in the end, like over time, those connections are going to turn into something valuable. I don't know what they're going to turn into, but meeting great entrepreneurs will guarantee me at some point in the future more knowledge, more business, more opportunity.
Perfect. No, I totally agree. And I suppose if you're getting into these people's heads, they're going to remember. If somebody could approach them and say, "Oh, you know what, I've done. I really need some. I'm looking for someone as an investor to help me with my business." And they go, "Oh, you know what's saying that I just met Dinesh last week. Here's his contact details." I mean, it's always good to connect, isn't it?
Yeah, and LinkedIn is critical to that. So, this from a practical perspective, it's dedicated. It's spending time on LinkedIn to actually find good, valuable content and share it with your network. Constantly building your network, and then from a social media perspective, it's using Twitter so that you're constantly providing value. To me, it's not about doing there's so much noise out there in people throwing things out there, and most of it is self-promotional, right? And one thing I try, and I'm not perfect, but I try as much as possible, is to put myself in my audience shoes and say, what would they want to hear about? And the rule we have on our team is only 1 in 8 tweets can be a self-promotion, like can be something about me. Everything else has to be either something about one of the companies I'm working with, an interesting insight from the business, or something like that. So, I'm still there in people's minds, but I'm providing value all the time.
Perfect. And you know what, you've just drove me perfectly into the last question, because I think we're going to wrap up very shortly. But since we're now on that topic, one of our students or followings actually reached out to us a little while ago about this, because they've just got started on Twitter with their own business. And the one thing that she couldn't quite get her head around was how she can, firstly, how she can be staying relevant on Twitter. So the sort of things that she should be posting, that without coming across too salesy again, but also the best way to connect with her potential clients, because sometimes we've even had this could be a lesson for us, where you message someone about you want to engage with them into further work, but you don't quite, sometimes if you send a mail, it's too long, they can't bother to read it. That's why I liked the idea of your reach out to me, let's have a coffee sort of thing. What sort of things could you suggest maybe to somebody like that, who was firstly trying to stay relevant on social media, but also the best way of sort of bringing potential clients forward?
Yeah, so let me answer the first question. So being relevant is about it's about being authentic first. So take things that you are not going to have to work hard on to share with other people. What are your interests? What are the things of value you bring? So for me, it's sales stuff, marketing stuff, business stuff, finance stuff. So if you look at my Twitter, really what it is, it's my team and I sitting together, and we have every 2 weeks where we sit down, we map out the next 2 weeks, and we decide what are the main themes we want to share with our audience, and then we map them out, and we use Crowdfire, and we use different tools like that to be able to drive those core messages out. And it's just dedicating the time to talk about the things you're passionate about, and that are not you, because everybody's passionate about themselves. It's really about the things that the things that drive your passion, and that'll honestly, you will naturally pick your audience will gravitate to your message, and you don't have to worry about designing a message relevant to the audience. People will self-select, and then you'll have followers who care about the things that you care about. And when you have a values match, that leads to the next thing, which is the people who have values matches with you will want to engage more deeply with you, and then offering mechanisms for them to do so. And speaking is one. Email coffee meetings are great. I love coffee. I'm a huge coffee addict, and so the result is that I love having coffee, and I love finding weird coffee shops and cafes that nobody's ever seen. So every time I have a meeting, I have this game where I try to have it in a different coffee place, so that
That's
I
great.
get to try. And it can't be a big. I try as much as possible not to be a big brand coffee place. So I find all these weird holes in the wall where the coffee is probably $25, but who cares, right? I'm paying, but it's a place that people who, like, I've been in New York and I found coffee places that New Yorkers have never heard of, and so it becomes a game, and it becomes something that you can engage with. So find something like that you can do and do sustainably, and again fuels your passion and can be something to break the ice. Then be really clear about the kind of people that you want to engage with, because that's the hardest thing about social media is you don't have access to all the information. So my filtering process kind of goes like this. I start out on social media, we connect on social media, and that's kind of like, I call that shouting across the room, right? So everybody, you know what? Yeah, raise your hand, no problem. Hey, it's great, no problem. And then the next level is, okay, you know what? We're gonna talk, in the bar, right, where you're kind of standing across from each other. And for me, that's the LinkedIn level. Right. So then I push them to LinkedIn, and we try to connect on LinkedIn, and I get to see a little bit more about you. I get to understand your background. We have a couple of conversations by email. And then the third level is sitting down at the coffee table and actually spending 20, 30 minutes of quality time. And frankly, once you get to that stage, for the most part, most of the people I get to that coffee meeting are fascinating people. Not all of them I do business with, but all of them I gain something from the experience. And so that makes it kind of very self-fulfilling for me, because I want to do more of those.
Awesome.
And to be fair, I think that is a sales funnel in essence, really, isn't it? In
It is.
marketing terms, that is, you're pushing people through a certain funnel to be able to get to an end goal, where even if it's just on a personal level and you're not necessarily even trying to, even if you're just trying to build a relationship with that person, just to see what your future potential kind of ventures are.
Yep. It is. I mean, I'm an old sales guy, so I look at everything from kind of that funnel kind of view, and frankly, as the key thing for me is, make sure that your audience are people you would like to spend time with, because life is too short to be engaging with folks that you really don't like.
Perfect.
Question come through on our Facebook community.
There's a few questions here.
Is there?
Yeah.
Are you happy to answer them, Dinesh?
Yeah, I'm good till I'm good for a little bit more time.
Okay.
So one is, what he's put is it goodwill purely ROI for the greater good?
So, the difference I say is this, right? There's investing, and then there's social work, right? If you're coming to me to be as an investor, I'm going to be a hard-nosed bean counter investor. If you're coming to me because you have a social good, then let's discuss it as a social good. And, there may be investing benefits associated with it, but I won't evaluate it that way. I'll evaluate it based on the social good. And, I'm a firm believer in spending a percentage of everything I make back into society, either through charity or other mechanisms. But, I'm careful about that, just as I'm careful about investments. So if it is a social good, I'm happy to talk through it with you and see either if there's a way that I can help. And the three ways I could potentially help is, I can help from a people perspective. I have lots of high net worth individuals that I'm connected to that also have a social part of their portfolio, or from an experience perspective in terms of helping drive the mission forward, or from a capital perspective if it's something that I personally believe in.
And I think the next question is going to really perfectly wrap up this show altogether. He wants to know what you do during your downtime. Just when you're chilling out and closing the day off, what do you do to kind of switch the mind off? And obviously, as an entrepreneur, you never really do switch your mind off. But what is the best practice for you?
So I'm a musician. I played the fiddle. I learned fiddle for 20 years, and so I still play the fiddle a fair bit. And that is a big part of the kind of how I relax is music, all different types of music. I love Irish music as well, which is a strange thing for an East Indian Canadian guy. But yeah, so both classical violin and fiddle, and so that's one part. The other is travel. I love travel and I love history. So what I do every year is I take 4 to 5 weeks off with my whole family, and we go and we see the far-flung parts of the world and experience those cultures. And I try. I'm not always. I'll be transparent and honest with you guys. I take the phone with me and I try to keep it off, but as much as possible. But yeah, for the most part, that's where I get my kind of my recharge is by listening to great music and playing and practicing great music and seeing the wonders that are in the world around us.
There you go, Robin.
Perfect.
There's your answer.
Thank you, Robin Waite. Robin was a guest on the first ever episode, and
Nice.
he's been a key person within our community. So thank you for the questions.
Also, I think that's a good question as well, because sometimes it's good to find, people see these successful people and they think they just see them as these business people. They don't know what's actually behind it. So when you've got that bit of a personal touch, a bit more about their background, you can sort of relate to them and say, oh, he likes that. So do I.
Yeah.
I don't know what it is about
just
it.
a workaholic either. He does have other interests.
Has a life.
Yeah.
Yeah. I mean, everybody has a story, right?
Definitely. Yeah.
I think that was the perfect way to wrap up this show.
Yep.
Dinesh, you have been absolutely fantastic. I could not put it into words just how brilliant these 2 episodes have been, and I just want to say thanks again for coming on for a second time. Maybe even in the future, let's do a 3rd episode, because I'm pretty sure you could ramble up a few more value bombs for our listeners.
Yeah, my mission is my vocation, as I say, is to share what I've learned. I don't believe that there's a that knowledge. I'm Hindu is my background, and we have this idea that knowledge is like light, and whenever you light a candle, you'll note that if you light another candle, the initial candle isn't in any way diminished. So knowledge is like that. When you share it, you can create an incredible effect by that, and it just self-perpetuates, propagates without in any way diminishing the person who shares that knowledge. And that's a fundamental belief that I have. So I'm always open to try to share, and hopefully people get something out of it and are able to make something of that information and share it on forward.
Perfecto. And it's it's been an awesome. You've definitely done that, and it's been an awesome two episodes. I'm looking forward to sharing it. And there's already people saying that they can't wait for us to send them the link. So
awesome. Well, thank you guys too. Thanks for inviting me. Thank you for having such phenomenal, engaging questions. I had a really great time. So thank you.
Brilliant. Before we depart, Dinesh, we'd just like to find out how our listeners can get in contact with you if they need to.
The best way is, they can follow me on Twitter. That's easy. The other, Dinesh K at work. The other way they can get a hold of me is on clarity.fm. Again, clarity.fm/Dinesh K at work. Mm-hmm. On LinkedIn, LinkedIn/in/Dinesh K at work. Any of those would work. And yeah, you can get a hold of me, and we'll try to get back to you as fast as we can.
Perfect. Again, thank you so much for coming on the show, Dinesh. It's been absolutely amazing.
Who knows? We might even have to invest in a clarity session for mentoring.
I think we're going to have to.
Happy to. You get the friends and family discount.
Perfect. That's why I love these podcasts.
It's great.
Awesome. Thanks very much, guys.
It's been awesome, Dinesh, and we will catch you soon, buddy.
Okay, cheers.
So then, guys, what an amazing episode it has been. We hope you've taken away some super tips and advice from today's episode and from our special guests. And don't forget, you can replay this show or check out any of the show notes by visiting our website at www.stageonestartup.com/podcast. But before we leave you, we'd just like to put the icing on the cake. We always like to finish the show with our current and most special announcement, the S1S contest. Anybody can enter. All you need to do is follow the rules of the game, which Brad is about to tell you. But first, here's what to expect to win from the contest. You will win 1 year's free subscription to LivePlan, 5 free entrepreneurial books chosen by myself and Brad. You will also win a personalised S1S t-shirt with the winner's name on it. Could it be any better? Now, Brad, if you could just tell our listeners what they have to do to be in with a chance to win.
Always a pleasure, Greg. So, guys, all you need to do to enter the contest and have your chance of winning these amazing startup gifts are: number 1, subscribe to the podcast. Number 2, leave a tasty review for us. And number 3, give us a big fat 5-star rating. Once you've done that, take a super selfie of you holding a note that says done, #GiveMeS1S. You can post this on Instagram, Twitter or Facebook, but make sure you tag us in the picture as well as put in the hashtag into the description, as we will be doing the search for entries by using the hashtag. Visit our website on the stageonestartup.com/podcast page to see the end of contest date and when we will be revealing the winner. We will also be giving our winner a shout out on the podcast to congratulate them.
So then, guys, it is literally that simple. You've got to be in the game to win the game. Thanks so much for listening to today's show. We really do appreciate everybody who has tuned in to take tips and advice from today's guests. We will continue to make it our priority to provide you with the best of the best so that you can go from launching your business from stage 1 to success. Goodbye for now, guys, and we shall see you in the next episode.
Houston, we're back.
Thank you for listening to the Stage 1 Startup Podcast. If you're looking to launch your own business idea, visit stageonestartup.com for recommended resources and step-by-step guidance to help you succeed. Prepare for takeoff.